elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Dropping in for another stock analysis. This is a Patreon promotional, so it'll be on my Patreon first and then find its way onto YouTube later. Very small channel. This is the underground. We're going to do this stock analysis request. If you get value throughout the video, be sure to like and subscribe. All right. So we're going to be taking a look at this one company that is in the space market. All right. This isn't a requested ticker. So let's dive right into it. All right. So ticker is ASTS. All right. Space Mobile Incorporated. This trades on the NASDAQ for $86.85 a share. The market cap is $36 billion. Let's go down. Company is headquartered in Midland, Texas. I did the analysis, reviewed the earnings call, and looked at the valuation and everything. So what is it that this company does as a business model? All right. Well, space, the final frontier. Joking aside, it is a space company, but the idea of their business model is they're going to launch satellites all around the globe to create space-based cellular broadband network. And what does that mean? Well, we all have these cell phones, right? And in certain places around the world, you'll lose cellular service because it's not near a cell tower. So if I have Verizon, for example, and maybe I take a cruise and we're in the middle of the ocean, I'll lose signal naturally, okay? This eliminates that. You'll have service. The actual business model is you'll have cellular service all around the world, regardless. All right. And with that, the execution concept is they're going to launch all of these satellites all around the globe, and they have already been executing upon this. All right. So let's do a little dive into their financials. We'll do a little bit of assessment of everything. But first, in keeping with traditions, we'll do a sniff check here on the valuation of how much cash they're looking like and on the balance sheet and so forth. 1.20 billion in cash, 722.48 million in debt. Market cap is 36.10 billion. Enterprise value is 27.28 billion. Okay. So we'll look at their margin profile. This is not a profitable company. However, gross margin is set at 68.68%. All right. Financial statement analysis. Premature sales happening here. Documented recorded sales for 2023 is 0. Okay. Share count. Shares are going up as usual in this type of company, which I'm not surprised. Balance sheet analysis. Cash is going up in the right direction, while debt, let me go down here, debt is going up as well. All right. So from a cash flow perspective, cash burn is accelerating as usual in this different phase of the company, and leverage free cash flows are in the negative, a negative double whammy. All right. But stock has gone up. All right. So what's the idea of this company as an investment? Okay. And the timing and valuation thereof. All right. Now, company's overvalued, guys. The time to have been investing in this was all throughout 2023 and 2024. Higher caliber, advanced growth investors were probably positioning in here, valuing their story, okay, and valuing as a sheet of paper as a corporation or incorporation on the actual market, evaluating their story against their total addressable market, doing running projections on sales, etc. and etc. This takes skill to do. All right. And since then, execution towards that story has been happening through these launches, and the actual infrastructure of the thesis is being built out. And since then, the market has rewarded that actual execution to the shareholders and the management team and this company thereof on the actual stock market. But Goofy, how are you going to be able to get in at 2023, 2024 valuations, $2, $3, $4 a share? Well, I do it all the time, guys. If you've been following my channel, I do that type of stuff. All right. And the intricacies of the how to, I teach it on my Patreon. You could check that out for $9.99 a month. Annual option, you can even do a 20% discount if you pay up front annually and so forth. All right. Really can't beat it. Check that out. But going back to it, all right, I've assessed 10K analysis, different classes, structure of shares are on there. There are some warrants out there, a little above 3 million warrants are out there at a strike of $11.50 dilution. So it's about, rough math at the top of my head, that's about 34-ish million. But let's see if my math checks out. I'll pull out my calculator. 3,053, bear with me. Exercise 1150. Okay, I'm sorry. 35 million and change worth of dilutive pressure, and an 11 and a half strike against a $86 premium. The spread delta between that is dramatic profits. All right. So investors that purchased the warrant or were granted those warrants are now looking pretty good. If I had those warrants and I was an insider, what would I be doing? I'd be selling those things right now. All right. Consensus estimates. Let's look at it. Growth rates. All right. Looks like great growth. All right. December of 2030 consensus estimates got them on a little backdrop of 25% negative to 2.66 billion valuation. Keep in mind, this is a $36 billion company right now. All right. Why am I saying that the time to have been buying this was 2023 or 2024? Because execution hence wasn't started, all right? Or they were not getting credit for the execution of the business model. Um, so the price is what you pay and the value is what you get, you see. What the actual equity is pricing in right now is 15 years. I assess about 15 years worth of good execution, okay, is what this company is pricing in right now. All right. So what does the stock need to hold this valuation? Well, they need all of this execution to continue to run and run, and there needs to be no hiccups. Executional risk is not priced in, you see. So the actual investment this is the proposition of the investment. Investors that were right here are selling the equity to investors right here. These investors right here were buying the story and the potential of everything. Execution started, investors were rewarded for that execution. There's a big support line right here where the market has priced their execution. That was good execution, and the market has assessed the company's was worth this much. I'm sorry. More proper execution and some hype stuff happening has excelled the actual company's stock price. So the risk that is not actually priced in. Let's talk about that. So investors that are buying at these valuations, maybe you break even in 10 years. All right. Um, with that being said, the executional risk hasn't been priced in. So let's say that one of these launches, something bad happens. I don't know, the rocket blows up midair, or it fails to launch, okay? Or the rocket comes crashing down, all right? Stock price is going to blow up, crash down, fail to launch just like the rocket. One of these failures, this stock's going to go back down to $20, all right? How much do I think they're worth? I think they're worth 2.5 billion, 5 billion, if that. All right. So there's the bad part. Okay. The timing and valuation doesn't line up to where this is a good investment. I think it's a bad investment. Now, is it a good company? Is it a good or great company to invest in? Yeah, maybe. I think it's an opportunity. Cellular service market worldwide has a huge TAM. It's growing. All right. We'll look at actual um, established competitors. Well, Verizon is now a partner, but you get the drift. Verizon is doing over 130 billion in sales towards cellular service. All right. We'll look at AT&T, similar 120-ish billion in sales for cellular service. Now AT&T and Verizon, they got some internet mixed in there, but you get the drift, okay? So looking at the big picture, there is a huge investment case for this company due to their TAM and story, but all of it is all priced in right now, you see. All right. Sure, their actual track record of missing here is not good, but they're growing, and that's what matters. Um, Now, with the consensus estimates, compared to their TAM and market cap, if they execute and get 25 billion in sales in 10, 15 years or whatever, you know, 100 billion, 150 billion dollar company this will become. But right now, what is the play? Well, if I was personally interested, it's not financial advice to anybody, it's all entertainment purposes. If this was me looking to, if I'm very interested in this company and I wanted to actually get a piece of ownership and have a position built, I'm going to just wait for one of these rockets to crash and wait for the market to swing this and crash this stock on the downside and just enter a decent sized position, nothing serious, on a portfolio weighting scale as a speculative buy. All right. That's really the play. How much will it go down and how much can it go down? It can go back down to $10, depending on the crash and growth trajectory of what they've demonstrated. There's a lot of support here in the $20 to $25 range right here. Can break that support level though, because there was only 3-4 months of established support right there. All right. So that is the actual stock analysis. All right. You get honesty here. All right. If you value that and you find value out of this and you want to take it a step further in your journey of growth and be part of a like-minded group of investors, get more direct access to me, once again, check out the Patreon. All right. I'd like to thank everybody here for their support and interest in my channel and my following and so forth. It means the world to me. With that being said, until the next time, I love you and take it easy.